The market's currently above all-time highs. We have nowhere to target. Um, Trading all-time highs can be very difficult. It can feel just confusing. You can feel lost because you have nowhere to gauge on where the market is going to truly go. You don't know where to really set your take profit levels are. You have to wait for internal structure to build up. You have to, maybe target lesser risk reward trades. But I want to give you 3 tips on how you can help navigate it. 3 tips to help you navigate trading all-time highs, help you take profits, help you understand levels to a price is likely to reject from or target without having any actual liquidity on the screen. Two invisible tools. One thing is going to be a tip I'm going to give y'all. So let's get right into it. The first tool I'm going to talk about is standard deviation, the importance of standard deviation and what it actually is. Now, standard deviation is a projection tool. It is a Fibonacci projection, and I'm going to give y'all the settings for mine right now. Y'all can screenshot this, put it onto your trading view, copy, paste it, whatever you got to do. These are my settings. I'm going to give you a couple more seconds to copy, write it down, whatever the case may be. I'm going to scroll down now. These are my settings, and I'm going to break it down how I use them. Now, why Fibonacci actually works, I honestly couldn't even tell you. I really don't know why these projections work, but they do. I can tell you that they do 110% because I've been using them for the past 2 years now. They have been working for me. I have been, applying them to my trading in a whole bunch of different ways, and I can tell you 110% that they do work. Now, how to use them. You're going to mark your Fibonacci. You're going to drag the high to the low. You're going to drag the high and low of the Fibonacci to the manipulation candles prior to a reversal or an expansion. That's usually how people draw them. I'm going to give you another way too, though. So, for example, this would be your manipulation candles. This last bullish candle prior to, the manipulation leg before we got this reversal. So, it would be, I would drag it like this. I usually do bodies. Some people drag it from the wicks. Really, it's subjective, whatever works for you. But I usually drag it from the body high, from the bullish body high to the bearish body low. That's usually how I would do it. Subjective to each, model at hand, obviously, but that's how I would do it for this level. And as you can see, each projection usually does align. If you do it correctly, it will align with some type of high or low within, the market in front of, or the model in front of you. And as you can see right here, price did just that. And as you can see, once we tapped it, we did have a negative reaction. It caused price to rebalance. Now, probably a good majority of the time when price does tap at the 2 to 2.5 range, you will see price rebalance to around 50% of whatever the range is at hand. If it doesn't do that, you will see at least a 25% expansion rebalance. And if we push past 50%, it's a lot more rare, but it does happen to where we can reject off of this as basically like another trampoline for price, and it will send us skyrocketing in the opposing direction. Really just depends. And then when we inverse it, it can be used as an inversion play, an inversion PD array, whatever you want to call it. 2 to 2.5 is very important. You can also, I'm sorry, I just heard something. My fault. You can also measure out 2 to 2.5 from manipulation wicks, dojis to be exact. And this is a perfect example of it. You'll mark it out from the wick low to the wick high if you want to see higher, wick high to wick low if you want to see lower, etc. And as you can see right here, -1 does align perfectly with these highs. 2 to 2.5 aligns with 25, 4, 25, 6. That's the range. So this is my weekly, target over the next coming weeks. I would want to see price expand to these highs. Now that we've already taken out the -1, we should either get a straight move or we will get a reversal. It will be no in between. One of those two things will happen, as you can see, just from marketing with the standard deviation level. I'm gonna find another example for y'all as well. This is also applicable on all time frames. So I'm on the monthly, so let me zoom in a little bit, make it a little bit easier for y'all to find more examples. I'm gonna show y'all a bunch of examples of this. Another example would be right here. You see price was selling off. We finally got that reversal following or prior to these candles right here. Got the reversals. Price was constantly making lower lows. Got the change in the state right there. The last move prior to the change in the state would be known as, would be where you would insert your projection at. And as you can see right here, 2.5 aligned perfectly with price and where it actually went. And as you can see, we also rebalanced to 50% of this range. Looks like we did about to standard deviation of the range actually, and this is another way you can use it. Using the projections to measure out ranges and measure out price legs. And as you can see right here, price pulled back to OTE of the range. I'll move it over so I can see the number a little bit, but we pulled back exactly to 0.62, perfectly respected it. Price continued to go back in this direction. Now, this is usually where price will reverse from 9 times out of 10, and if we don't, you will see strong expansions. Another one, let me just delete this to make it cleaner. Let's find another example of just using standard deviation to our advantage. This is ugly, Jesus. You can say this can be your last bullish leg before we got this sell-off, and as you can see, relatively respected 2 to 2.5. It aligns usually with some type of drawn liquidity, and that is usually where you want to target for price to go or target for your take profit levels. If we have let's say I'm in actually let me draw it out. So let's say we have this expansion model right here. We have this model for say price just continue higher, then boom, we get the change in the state, pull back, and I'm going in short. A lot of the times what I will do is I will mark out standard deviation, what aligns with 2 to 2.5, this low right here. This will be my main take profit. I will enter short, stop at the high. This is my main take profit because we are more likely to reject from this area. I'm not going to take profit here. I'm going to go break even here, but I'm profit here because it is likely that price will run past all of this liquidity and draw straight to 2 to 2.5. Now, if we, respect it, tap it, might see a small retracement, then price will continue and then we'll really sell off to complete the model. This is another thing that can happen. Usually once we tap 2 to 2.5, it will usually take off 75 to 80% of my position, leave the runners, go break even, whatever the case may be, trail my stop into profit. However, the model, allows me to do at the time. It's all subjective. I'm sorry, I'm looking over here because my camera's usually here, but I'm forgetting that it's here. But yeah, we'll usually go to 2 to 2.5. You might see some type of retracement of 50% of the range or even more, depending on, the model at hand. Is all subjective. But yeah, that's how you would use it. Mark it out from the high to the low, prior to the change in the state, prior to the manipulation, prior to the reversal, however you want to call it, however you want to label it, and use it as take profit. Now, when using it at all-time highs, as let's go to, 4 hour right here, we have no actual liquidity to the left of us. There's nothing next to us now to really gauge where price wants to go. And so now y'all can see how important standard deviation can be, how it can be used, and how we can use it to our advantage, because now we have no actual levels to the left of us. All we're relying off of now is these levels, these key levels, and then flat numbers on the side right here. 26, 25, 25, 2, 24, 8, 24, 4. All these numbers right here are also key levels to where you can see price reverse at. You can see price stop. Jesus. You can see price stop at, price reverse these flat numbers, 2350, 250, 200. These are also key levels. Now, the third thing I'm going to be talking about as well. Well, actually, let me give y'all, I already did. I showed y'all what I was looking at on the monthly. This is where I can expect us to, my trading view will load. This is where I can expect us to go on the monthly when it does load. But I'm gonna start talking about the last thing now. The last thing I will be incorporating is Asia dealing range. Now, Asia dealing range is essentially, why is my trading view taking forever? Asia dealing range is essentially using standard deviation, but from the Asian session prior to New York. Now let's go to the hourly so I can show y'all. And a good indicator that I use to just help pinpoint this more accurately and help just make it easier for me is the ICT kill zones and pivots right here. This is my settings for it. I can slow the video down, screenshot, whatever you got to do. These are my settings, how I use them. And yeah, for Asia dealing range, all you would do is say right here, since we are bearish, Asia dealing range is in a bearish trend. I would mark it out from the high to the low because I'm expecting to see lower price for the day. This isn't going to be for every Asia session. This is only going to be for when it aligns with the daily trend, the daily bias, whatever the case may be. This isn't every day, but when you can use it for the day, it definitely will help. It is definitely helpful. It is useful, and it will definitely give you just an idea of where price is likely to expand to, and then also where you can look to take profit at. As you can see right here, The -1 projection was met, wicked through it. We never got any bodies through the -1 projection. Instantly came back from it. Very strong wick, very strong doji. It was respected to the tick. Another example we can maybe look at here. I'm not sure. I doubt this was actually yeah. This, as you can see right here, it won't always be 110% accurate. Obviously, it is subjective to the model, but it give you an idea. We came to -3.5 to -4, respected this range perfectly, instantly sold off. And this was all uncharted territory. This is what you call no man's land. There's no liquidity up here to the left of us. There's nothing to actually gauge where price is going to want to reverse at. However, as you can see, look, to my right, what I just tried to do, I just tried to insert a, as y'all can see, 23,100. We ticked it perfectly, which is what I mentioned earlier. And then we also met the standard deviation projections. Now, as you can see, this is how you're going to want to navigate going forward while we're at all-time highs, while price is trading into these just uncharted levels where price has never been before, because it'll give you a good idea. Now, this isn't going to be 110% accurate every single time. This isn't going to help you top and bottom tick any type of move, but it does give you an idea. It is a good tool to have in your arsenal, a good tool to have in your toolbox, to where it can help you incorporate it and save you a lot of time, save you a lot of money, and also help you potentially maximize profits while trading above all-time highs. This is usually, you know, harder times within the market. We're also in the summer months, so definitely be cautious. Definitely use it to your own discretion, and definitely do your own homework, do your own research on it as well, and learn how to actually mark standard deviation properly. Another example would have been this body high to this body low. As you can see, we wicked through, respected standard deviation, never got no body through it. Ended up using it as a reversal. Works every time. Not every time, but 99%, 95, 99% of the time, whatever you want to call it. Very good way to use price, a very good way to use these tools. And yeah, 3 things that I mentioned again: standard deviation, Asia dealing range, and then flat numbers on the side of your chart. Incorporate it, look for it, especially once we get, you know, back above these highs up here. Once we start trading, you know, my expectation from the market for this week is probably just us rebalancing into this daily order block, which is what I wanted to see yesterday. I did mention that. Once he's tapped this daily order block, see price continue higher. So if we do follow through with, you know, what I would like to see the market do, or what I spoke about the market doing, you're going to be using this tool. This is going to be very helpful, and it's going to be very unique because you can't see it. It's not actually on the chart. There's no liquidity that you're looking at, but you're using tools and using discretion. How I'll mark it out for this level right here. As you can see, -1 did align with all-time highs, and the -2 to 2.5 also aligns with that monthly wick that I showed y'all earlier, to where it is just about the same. And when they do align like this is when you have the highest probability in draws and liquidity, and also just the highest confidence in any type of level or setup that you are taking. And this is good to also help you boost your risk to reward as well, because usually when you use these on your trades, you usually can average a 2 to 3 R just by using standard deviation and understanding the projections and mitigating your risk properly per setup. Now, usually for me, once we hit -1, depending on the model at hand, I will probably go break even and then mainly target 2 to 2.5, because I like to take higher risk to reward trades. This can result in you getting break even stopped a lot more, so definitely be aware of that. That's how I use it. I did get break even today. I did take another loss following that, but I saved myself 1 break even once we tapped it, because the risk to reward was like a 1-to-1. I don't really like taking 1-to-1s. That's just me personally. Some people do, some people don't. I'm people that don't. So yeah, that's how you can use it though. I use it today as well. Y'all go back and watch. I didn't put the recording up, but y'all go back and watch the video. Y'all can see I talk about it. But yeah, I hope y'all enjoyed this video though. Hope y'all learned something. I appreciate everybody for watching, everybody for subscribing, all the new support, comments, likes, all of that. It means a lot to me. I really appreciate y'all. So yeah, I hope y'all could learn something. Please subscribe if you are new. Please leave a like, leave a comment. Anything y'all want to see, anything that y'all can potentially learn from, anything I can do better on mine, just let me know. And yeah, I appreciate y'all for watching. I'm gonna catch you in the next one.